Hello friends, welcome back to the channel Inside GST. I'm your host Shravan and I wasn't recording the video from a very long time because of some reason, but I have the topic, very small topic to discuss with, and that is about the distinct person. What is the treatment of distinct person, the GST, about its legal provision. So first thing, the distinct person is mentioned under section 25 subsection number 5 of CGST Act, and then it also have a reference in schedule 1 and entry number 2, and then its valuation is also covered under rule number 28, and then we will also discuss about where it is to be shown in GSTR 1 and 3b. Alright, so let's just jump into it. Alright, so first thing about section 25 subsection number 5, where it says that if you have a business and you supply the goods or service from the two distinct state, then you have to register the GST in both two state, and when you register in two different state, then you will be treated as a distinct person under GST Act. So let's take example, like you have a business, you are the owner of the business, but you have the two branches, let's say in Delhi and second one in the Uttar Pradesh. So you have to register in both two states separately under GST, and you will be treated as a distinct person, like your two branches will be treated distinctively under GST, like your branch in Delhi and then the branch in Uttar Pradesh will be distinct person. And what is the implication of the distinct person? So the implication is that when you transfer the stock from one place of business, like from Delhi to Uttar Pradesh, then it will be treated as a normal supply of service or goods. So like you are just supplying the goods from one factory to another factory in different state, and this will be treated as a distinct person, and the GST will be levied on that transaction. You will say, okay, so that's not fair because that is simply the stock transfer. The owner is simply the same person, so why the GST involved in this? So my friend, I will tell you later in the video that what and why there is no profit or loss in this situation. So first thing, that it will be treated as a supply of goods or service when when the person will be treated as a distinct person. Second thing, it is mentioned in schedule number 1 entry number 2, where it says like when a transaction is without any consideration, then also the transaction will be treated as a supply. So suppose you are transferring the goods or services from one factory to another factory in different states, then even if it is without any consideration, then also it will be treated as a supply under GST, and the transaction value will be calculated as per rule number 28 of CGST rules. So what that rule says? That rule says that if like when the transaction will be happen between the distinct person, so the transaction value will be the open market value. Whatever will be the open market value, that will be the transaction value. And the proviso of this rule also says that if there is a value mentioned in the invoice, like when one factory is supplying the service to another factory, and you have also created an invoice, so whatever value you mention in the invoice, that will be treated as a open market value. If the recipient distinct person can take the input tax credit on it, and that input tax credit should be full. So like I have the factory in Delhi, I want to transfer the stock of Delhi factory to the Uttar Pradesh, then I will have to create the invoice and it will be treated as a supply. So the factory which is receiving the goods, like in Uttar Pradesh, that can take the full input tax credit. So in net there will be no loss or profit situation, because when you pay the tax from your pocket, then another factory which is receiving the goods can also take the input tax credit on it. So there will be no outflow of resources from your pocket simply. So that's why there is no profit or loss situation for you. You will remain the constant. And why does it happen? So it happens because the GST want to GST is a destination based consumption taxation, so they want to shift the input tax rate also from one state to another state in which goods is finally going to be consumed. So that's why just they want to shift the input tax rate from one state to another state. So that's why there is a provision in this act is like the concept of distinct person. So the provision is simple. When the two factories register separately into GST in different states, so they will be treated as a distinct person, and the supply between those two states will be treated as a normal supply, and you will be held the factory which is supplying the goods will be treated as a separate person, and it will have to pay the tax on it. The recipient factory who is receiving the goods can take easily input tax credit on it, and that's too only, or means they can also take the input tax credit fully, and the value will be those which is mentioned into the invoice. So this is the concept of distinct person simply. And one more thing, if you have the confusion like where to show that treatment into the GSTR1 or GSTR3B, then table number 4, which is general table, you have to show the supply into that table number 4 of GSTR1, and for GSTR3B simply where you show the supply to other person, you simply have to add up those figure into that table. That was a quick video for the distinct person. I hope you like it. I don't know that whether I will upload further video in this channel. We will see it in the future, but till then I can only say that bye bye.